I mean, you could set up 18 circuses and a shelter and an offshore island, but you're still responsible for what you do. So I always encourage people, because you guys get asked everything. You ever notice that? People ask you everything. What about this? What about taxes? What about my dad died? What do that? And you guys end up giving advice on everything. Well, I always say don't. Stick to what you are an expert in and refer those people to a lawyer, accountant, etc. Because you can be held responsible even if you don't end up in having to pay someone something. You can go through a lot of stress, damage to your name and reputation. So people come like, oh, my realtor said I wouldn't owe. I sold my house and my realtor said I'm not going to owe on it. So I'm sorry. You didn't live in your primary residence for 2 years. You do owe. So it's better just to refer them versus give bad advice. Now let's go back to the LLC world. So you've set up an LLC with Florida. You're the only member. Where does that schedule go when you file your taxes?
C.
Schedule C on your personal return. Okay? Let's say that you admit a partner to your LLC. Okay? Now you have more than one member, you have two. So with two members, you're now considered a partnership. Okay? Form 1065, a partnership. So you can't do the Schedule C anymore. And a lot of people don't realize this, but partners in a partnership are not supposed to be on payroll. Wow, what do you mean? So if you have a partner and there's 100 grand available for each of you to take home, you're not supposed to run that through payroll. Partners are supposed to take a draw, and out of that draw, they put aside their FICA, Medicare, and federal income tax, and they remit that, just like the sole proprietor does. How many of you are sole proprietors? You file Form 1040-ES to pay your estimates. That's how a partner in a partnership pays their tax as well. Okay?
Is that 1040E?
Form 1040-ES. Okay, so two-member LLCs fall under the partnership regulations. Now, because partners don't take payroll, guess what happens to their net income, their take-home income?
It's subject to
It's subject to all the payroll tax.
all the payroll tax.
It's subject to federal income tax and FICA and Medicare. So now we don't have this bucket called the dividend distribution bucket. We have this wide open pond where everything you make is subject to more tax.
So don't create a partnership under an LLC. Is that the moral?
That's a very good point for this type of business.
Yes.
So why would you have a partnership? I'll tell you. LLCs are the best entity for owning real estate. Don't put real estate in a corp, S or C corp, because they have horrible tax rules. You don't put your real estate in your business corp. Why would that be? So Dr. Surgeon has a practice and he's an S corp, and why is he the S corp? What's that bucket we have?
Dividends.
Dividends, right. So he's saving money. If he's making $1 million, he's not paying Medicare on probably $500,000, say $15,000 a year. Over 10 years, it's a lot of money. He puts his building in his S corp. Now, what has he done to his protection?
Created a lot.
He's created a problem.
Yeah.
Now someone falls in his building, and all of his medical billing is in the same entity as his real estate, and the lawyers are just drooling. So real estate should be, in almost all cases, in an LLC separate from the other entity. And it has the best tax rules. If I have a building or a piece of property, and I put it in an S corp or C corp, sorry, I just got over a bad cold. If I put it in a corp, and I say 5 years down the road, I need to get that out of my corporation because I want to admit a partner. And I don't want to admit a partner and give away half my building. If I paid $50 for that building, and now it's worth $100, just by transferring that to the LLC, I owe tax on the appreciation. In an LLC, you can transfer it 100 times and there's no tax burden.
Can I ask a stupid question? Sure. I want to go from I'm going to go from sole proprietor to an LLC. You can do that for me?
Yes.
I want to create an LLC for a real estate purchase investment. You can do that
Oh, I'm
for
sorry,
me?
we don't set them up.
You know what I'm talking
I'll tell you why, lawyers consider that practicing law,
Okay.
even though all you have to do is, use the lawyer, but you can go on Sunbiz and do that. So just to keep the peace,
Yeah.
we don't do it.
So the real question should have been, if I'm considering going from a sole proprietor to LLC and I'm still a little confused, I can call you.
Yeah.
Or if I'm gonna invest in a
Oh,
property
yeah.
with somebody, I'm gonna call you, and you're gonna tell me who to go see.
Right. And then in a lot of cases too, there's other things that come up, like, Scott, I'm an S corp, should I be? Under the new QBI pass-through deductions we have in the new law. So it's all that kind of stuff. So, now that I've filled up your brain with all that good stuff, let's talk about what you can deduct in the LLC and what you can deduct in the S corp.
Okay, so let's talk about that. The questions first.
Yeah, can I just ask,
Sure.
so say I haven't formed anything. What should I form if I'm anticipating netting 100,000?
I'd start with the LLC,
Okay,
because LLCs can make a tax election to switch to the S corp.
okay.
Okay?
It's easier to go from an LLC to an S corp than going from an S corp to an LLC.
Well, you
You
can,
do both,
Yeah.
essentially.
well, let me see here, you can, the LLC has some the S corp has some restrictions. But unless you're if you're sure you're gonna do 100, like right at this point, then you can just do the S and be done with it.
Yeah.
Okay.
And
It's just
before-
you're kind of stuck with that if you drop. So see, like I've got people that are, I'm gonna retire, I'm making 20 grand now, and they're in the S world. And they're paying for the balance sheet and income statement and all the other filings, so,
So start with an LLC, grow to an S corp?
yeah, that's the norm.
Yeah, and before I start taking some notes on what's deductible we're gonna talk about, right? Remind me again, C Corp is good for nobody.
Well, people who have C corp, now C corps fell under a new rule under the new tax law, which is kind of a flat 21% bracket. So, like client so-and-so who has 10 nursing homes that was paying upwards of 36%, now is paying at 21, is benefiting. But C corps are really only used for large companies anymore, IBM and different things. And the downside of a C corp is that everything in that C corp is stuck in that C corp. So if in year one I have a loss, I can't pull that into my 1040.
Mhm.
S corps and LLCs we call pass-through, because whatever happens here is put into your personal return. So year one, you start an LLC, you lose 10 grand. That $10,000 loss would then flow through to your personal return. Cs are on their own. So it's not really the best entity for small business. Okay?
Where does that PA come in?
That's just a term like professional association. It's the same as Inc. or Corp. You'll see most people that are in the service industry may use PA.
I think a lot of our people are designated as PAs, but meaning they have an LLC.
That would be
It's actually a
Kinda like
PLLC.
insurance.
Corp. It's a corporation.
Yeah.
Well, if it says PLLC is a designation for a service LLC,
Okay.
but PA is normally an Inc. Yes.
And you're right, David, a lot of realtors are PAs, and I don't think they're aware that.
Why is that? Why do I have a lot of PAs?
Now, you can be a PA as an Inc., but they're probably S corps.
Okay.
All my clients that are realtors with a PA are 1120 S corporations.
Oh, so that explains something.
Yeah,
Because of probably because of their income.
yes.
Yeah.
And I can think of the people that are PAs, probably disguised as an S corp, is because they got huge incomes.
Yep. Okay, so let's talk about deductions. What do you think you can deduct?
On which one?
What are we in?
What can you deduct in an Inc.?
Travel.
PA?
Travel, car, mileage.
Anybody else? What do you think you can deduct in the LLC?
That's what we want to know.
Really, they're both pretty much the same. And I'm going to tell you why. Here's what the law says. In order to be deductible, a business expense must be ordinary and necessary. Ordinary expenses are ones that are common in your industry. Necessary expenses are those that are helpful or essential to conducting business. So, and they compare that to the effect it has on your profit and net profit. So let me give you an example. Is a Rolls Royce ordinary and necessary as your business car?
Not in Charlotte County as a realtor.
Maybe
Sarasota.
Beverly Hills.
I'm gonna show you
Yeah,
the same
Beverly Hills
thing.
for sure.
Yeah.
You see what I'm saying?
Yeah.
So your office has a beautiful Monet behind your desk. And the IRS audits you and says, look, you can't depreciate that thing over 5 or 7 years because it's beautiful. It looks like France, but it is not ordinary or necessary, right? See that? So the agent would disallow that and say, now, what you could deduct is this lovely red poster. See what I'm saying though? So I go to CPE in Arcadia, and you go to CPE in Paris. Was the Paris continuing education ordinary and necessary?
No.
See what I'm getting at? So that's kind of
The
where,
arguments I would get in with me.
I know,
Yes.
I've already got an argument.
and what about clothes? Can you deduct all your clothes? Man, I deduct everything. I hear that all the time.
Can't.
My account deducts everything. I'm like, okay.
You can do
But
anything
you
until
can't
there's an
do-
audit.
Can you
No,
deduct
yes.
a car?
Clothes are necessary.
A normal
Well, it's a
car,
car, yes,
But if
absolutely.
you're driving.
But isn't it, it has to be a uniform, doesn't it?
You can't
If you do-
deduct street clothes. So if you could wear that out to dinner,
Yeah.
no. If you have your doctor's robe that has, you know,
Embroidery.
Yeah.
your Purell pocket and your stethoscope pocket and all that, and your squirt gun pocket, you can deduct that. But just your normal clothes, no. Dry clean, no. If you dry clean your shirt that says best realtor in the world, yeah.
Yeah.
But regular clothes, no.
I
What
want
about if you
uniforms.
had, I'm sorry, what if you had, what if we had a Keller Williams polo?
Yeah.
Yeah, that's a
You
work
could
shirt.
deduct
You
that.
can
Well,
deduct
it
that.
It's
depends.
advertising.
Does it look like a little
Your
polo
backpack,
emblem?
you could
That
deduct.
you could wear on the street.
So.
No, I mean a Keller Williams.
Example of
It's
somebody,
branded.
Matt Patterson, one of our agents, has the dry cleaner pick up his clothes every Monday, and it's just a bag of Keller Williams embroidered clothes.
Mhm.
He doesn't put his slacks in there. Does that make
Mhm.
sense?
Right.
Yeah.
So that is borderline, I'm gonna tell you why.
Borderline!
If you're sitting down with the agent, have you ever sat down with an IRS agent?
No.
Have I?
Fortunately,
Oh my
not.
gosh.
You're, just stand in the corner.
Have you ever-
We don't need to go
We've got
there.
a lot to talk about.
We're not going there.
Well, you're gonna have a hard time convincing them that a little logo is not streetwear,
What,
okay?
what if our name's on it too? Like, what if it has the company logo and?
You have a
our
better
name?
shot, but I'm just
Yeah.
telling
Okay.
you.
Yeah.
You know what really weighs in an audit? Audits, a lot of audits are not everything. They're like, we wanna see these 4 items.
Yeah.
Because maybe your meals, your meals are 45,000. And they're saying, oh, yeah.
And
So-
and you're-
It's the bar bill.
you're- No, I look like I got 45,000,
That's the
but
bar bill.
if you're a
So-
toothpick and it's 45,000, it's different, right?
And computers have helped the government because they have formulas in there. So when your return goes in, and they have all these nice apps now, and it says, your legal expenses are 20% of your income. And it vomits your return back out and says, we better look at you. So that's how a lot of things come up now. Very rarely do they just pull you and say, when they do market studies, they do. Very rarely they say, ma'am, we're gonna look at everything you did last year. Because they don't have the time or the people to do that. How many, yeah,
Oh, I was gonna say, what about car loans and repairs?
okay, I'm coming right up to that, I promise.
Okay.
We have a big special on cars.
Okay.
Yeah, but when they changed all those rules this year, you sort of like have to clump everything together. Well, this is how much you can deduct. It's not like you can deduct your meals anymore and gas and this and that. That's what I was told. It's like a certain amount. You can't, I didn't even have to go.
Is a
in there
different
and
line item
see.
for,
Is that true or false?
I believe
I
that
think you could
is,
still do that.
I believe that is false.
We
You
don't
do
know.
clump them together on the form, but you have a separate sheet, don't you?
I'm gonna give you one of these.
you.
I'll tell you why.
Okay.
Okay, so on your Schedule C,
Yeah.
whatever you need to do your job is fully deductible. Schedule A, miscellaneous itemized deductions, is the one that got axed. That's the person who gets a W-2, and they have all these unreimbursed employee expenses. And the government said, look, we're tired of auditing your mileage, but that's not on your business, that's on that other form.
Okay.
So for you guys, you are not You're not, whatever it takes to do your job is allowed.
Including going on business trips, like to family reunion?
Well, not a
and
family
meals?
reunion, but if you're going there for work.
That's a
No,
national
that's the
convention,
name,
that's
that's
what we
the
call
name
it.
of the
Oh,
convention.
Yeah, I'm
oh,
sorry,
sorry.
that's an educational
Everybody in
convention
Keller Williams
that we
gets
host.
Yeah.
exploited
Now, where do you
because
want, let me tell you where you'll run into trouble there. So let's say that you have an S Corp, a PA, and you go out to Las Vegas for a convention, and you take your spouse and 3 kids, and you write all that off.
Yeah.
Well, obviously, the agent's gonna say,
Yeah.
I'm gonna take your ticket.
Mhm.
Well, the same thing with auto.
Yeah.
If you're deducting your auto and your spouse's, your spouse needs to be an officer and employee of the company. Okay? All right, so I think we're clear on that. Now, why would somebody want to use a partnership or an LLC? Because, let me tell you again, S Corps, if you have 5 owners in the S Corp, and you've paid all the payroll already, that's W-2, right? And we have $100,000 to distribute after payroll as that dividend distribution, the law says it must be according to their stock ownership.
That's right, we're getting the stocks now.
So you can't say, gee, Johnny, you were great this year. We're all 25% owners. We're gonna give you 90 grand of the 100. It's not pro rata. You'd lose your S status with the IRS.
Because you've determined that ahead of time.
It's flat rule. If there's 100 grand to go through distributions, it's gotta be according to each shareholder's percentage of the stock. Why? Think about it. Just like dividends with IBM. IBM can't say, ma'am, you've been so great this year. We're gonna pay you a dividend and not the rest of you. It's illegal, okay? So the reason the partnership world exists is that in some businesses you would wanna do special things. We call that special allocations. David forms a partnership with all of you. He puts in $1 million for a new Keller Williams building. And David says, guys, I put the money in and I want some special rules here. In the first 10 years, I want to be allocated all of the losses. And you can do that in the partnership world. You can pick and choose, which is why it's the most complicated part of the Internal Revenue Code, really. You can pick and choose in your operating agreement how you're going to do certain things. You can say if there are losses, we'll do this. If there's profits, we'll do this. You can have different percentages for profits, losses, capital, all that type of stuff.
Change it every year.
Well, it typically won't change. Yeah, you could change, yes, how you're paying things out every year. Now, see, that doesn't really work in what you're trying to do because you're trying to get paid on what you produce.
Yeah.
So you won't see a lot of agents with a lot of employees as partnerships.
Yeah, yeah, no.
You might see the brokerage hat, but you
Yeah.
won't see this.
Yeah.
Okay, now, we're gonna get back to auto. Let's say that you hire somebody 1 day a week because your office is so bad. You hire someone 1 day a week to type or do mail outs. Is that an independent contractor, 1099, or is that an employee?
Oh,
Their
It's
family
an
members.
employee if they're not a licensed real estate agent, right?
Okay, anyone else?
It depends on how you have it set up, they could be.
Okay. Well, it depends on what the IRS says an employee is. So, if I come into your office once a week and you say, Scott, this is what I want you to do, you're my boss.
Yeah.
I'm an employee, and if it's 1 day a week, I'm supposed to get a W-2. Now, why can you get in trouble with that? Because you as the owner have a pension plan. And you fund your pension plan, and I'm supposed to be a W-2 employee with the right to participate in that plan, and you've excluded me. Why else would it be? You gave me a 1099, and I said, heck with it, I'm not gonna pay my taxes. Guess who they can go back to? You, they're gonna say employer. This person is not an independent contractor. You were supposed to withhold, and we're gonna hold you liable. Now, who would be an independent contractor?
But they have to do it for more people.
Guy that mows the lawns that you're listing.
Right, why? You're not, the guy that mows the lawns is not under your control, he's not doing what you say. The cleaning person that comes in, they probably clean for 10 different people, right? But you, even though I know half the people in Charlotte County do this, if you hire people for administrative help, they're employees.
Even if it's one day,
It doesn't matter if it's an hour.
doesn't matter if it's an hour.
What if they work from
What?
home? And
No, it doesn't-
they control their own methodology?
No, but
Well-
you're telling them what to do.
Like a
Just
Kelly
saying do
service,
this,
like
how
a
we do it
bookkeeping
is up to
Kelly's,
you.
that's a little gray. But you know, the bulk of the time, it's someone that comes in 2 days a week and helps you with marketing or advertising or mail outs, they're employees.
And you
Scott,
have to
what
withhold-
if they're a licensed realtor as well?
Okay?
And I'm paying them a percentage of when a property closes?
Okay, most people don't like this answer, so when you have, because a lot of times we'll have someone at the front desk that also has a license. The clerical part is supposed to be on W-2, the commission side is 1099. Isn't this fun?
Oh, no.
Wait a second,
But,
Scott.
so let's take, Scott,
Kill us.
let's take a brokerage away from it. Me as an agent, if I have an admin person that's say helping me out 3 days a week, and I don't wanna pay them as an employee, I'm giving them like a 2% of every deal that closes.
They're an employee.
Okay.
Still an employee.
Now, it doesn't come up all the time, I'm trying to give you the letter of the law.
That's the letter of the law.
In case you ever had a problem.
So this is happening in our walls, by the way.
Yeah.
It's happening throughout the industry. I mean,
Yeah.
I don't have that situation, but I know that situation exists.
And it can come up later, like it's normally when that person gets in trouble,
Yeah.
or they haven't filed and paid, there's no social security credit, or they get audited.
Can I ask a question? Writing a check, I'm making an assumption here, writing a check out of your own checking account for this 2 days a week that this person works, or 1 day a week, does not count as payroll, does it?
No.
You use a payroll service, right?
No, it has to go through payroll, even if you do your own. It has to go through FICA, Medicare, payroll returns, Florida, FUTA, SUDA, all that great stuff. That sounds like cuss words. Okay. All right, so, trying to fit all this in. So let's talk about record keeping real quick. How do you keep your records?
QuickBooks.
Let me leave the room, let me,
I take a 2 week vacation.
You're out in the parking lot picking up
Go
the
down.
seats.
I have a drawer.
Are you like, I have a client that has a drawer and she just empties it into a box and comes in and there's paper clips, hair,
And then you get that at tax time,
pencils,
right?
there's coupons, there's lids from 7-Eleven. That's some people. But let's talk about, because if you do get audited, it's painful if you're not organized, honestly. Credit card slips are not receipts. That little shiny paper you get is not a receipt. You have to have your credit card statement. You should either scan or copy those little slippery guys because they fade. If you're going out to a business meal, you're supposed to write down who you're with, the date, why were you with them, the topic of a conversation. That's why politicians don't write anything down. Just kidding. So,
so, let me rewind. Those little slippery, slimy credit card receipts. Those are not receipts.
no, I'm sorry. Your credit card statement by itself is not a receipt.
Okay, credit
Those
card-
are receipts. Sorry, my head's still off. You want to copy those because they fade. Those are receipts. Your credit card statement under audit, excuse me, thank you for catching that. Your credit card statement under audit, believe it or not, they have the right to say it's not a receipt.
Man, oh man, have I thrown a lot of receipts away.
You have to keep all of that. Sorry. Yeah, scan, you're allowed to scan.
Yeah, there's a lot
There were-
of-
there were
Would
apps
you,
for that.
would you recommend like a Nito receipt scanner? Yeah.
What's
Yeah,
that new
everybody's
app
busy.
what's that new app that Danny DeVito is?
Throw mama from the train.
Go on.
Okay,
Twins.
now, so your records, I like to keep stuff by vendor, FPL, Walmart, Amazon, and in order, so that you're orderly. When I write a bill by check, in the initial, I put the check stub with it, I file it away. Because if you ever get pulled, I'm telling you, you're going to suffer if you don't have your stuff, it's awful.
Can I make a real estate suggestion that Scott may not be aware of? But your book that you've all read and have probably tagged, The Millionaire Real Estate Agent, the red book, there are 2 specific pages, maybe 3, with a chart of accounts. If you don't use that chart of accounts in QuickBooks and whatnot, some will advise make a folder for every one, put it in the file cabinet, and put your receipts in those folders.
Yeah. And then if QuickBooks is great, because QuickBooks, when you pay your bill, it'll post it to your ledger. Paying stuff online is nice. There's all kind of stuff if you need help setting up, that's something we do, other people do. How about your auto? Let's get on the auto, that's the real juicy steak.
Oh, yeah, I'm gonna need a page for this one.
So, the biggest thing that I would say probably 70% of the people I deal with don't do is to keep a mileage log.
Yeah.
You have to keep a mileage log. Now, there are apps for that.
IQ, not mile.
Yeah, I use
Okay.
Mile IQ.
Why would you need a mileage log?
Prove how much mileage is.
The agent's gonna say, you're deducting all this stuff, prove to me your business use. So you've got 100% of everything deducted in relation to your car, no log of anything. And you go, but I'm a realtor. These people run me ragged around here. I drive all day long. And if you get a bad agent, they're not gonna allow it. So whether you're using standard mileage, which is what? How much? 58 cents a mile.
58 cents a mile.
It's huge. Do the mileage. Some people go, I don't want to keep track of actual. I don't want to keep track of my gas, my tires, my repairs, my insurance, all that stuff. Keep track of your mileage for total, and the portion that's for work, and the portion that's for work is a huge write-off.
Can you just estimate?
You can, but it'll be thrown out.
In other words, when
That's
you,
for the best.
no.
It is until you get caught.
Yeah, we figure out of the 100% I drive,
If you don't get
30,000.
audited,
Yep,
and
a lot of
so I
people
take
do that.
all the
Yeah.
miles and
So
I
when
said,
you,
like,
so I have the Mile IQ,
Yeah.
but that is taking it, then that is lumping, that 58 cents a mile is gonna then include
It should.
my insurance?
No.
Eh,
Oh, yeah,
no,
sorry,
it's-
yes.
So that already includes insurance,
Yeah.
what else?
Anything actual, so that usually comes out as more. So if you drive 20,000 miles, you're up to what? 11 something in deduction.
Yeah.
And that usually adds up to more than insurance, gas, tires.
Then the actual.
Right.
The standard mileage is usually more than the actual.
Yeah.
Oh, it's better.
Yes.
So that's
Plus,
gonna include all your repairs, your car washes,
Yeah.
everything, right?
plus, I'll be honest with you, most people are busy and they don't keep track of everything.
Yeah.
So I was told you could, like, at the beginning of the year, write down your mileage, at the
Mhm.
beginning of the year, and then at the end of the year, write down your mileage
Yep.
there, and that would be acceptable.
For total, but they still don't know what your business was.
What
So
actual
how do you-
business, yeah.
Right,
Can you
but
estimate that?
if I said I drove 3,000 personal and the rest is all work, then,
It depends on the agent.
How are you gonna prove
okay.
it?
Because you have no proof of what was personal versus clients.
See, the nice thing about that Mile IQ app is you're actually swiping one way for business, swiping the other
I
for
use
personal.
Everland.
But you gotta remember to
Works
do it every
great.
single time you get in a car.
Well, it's better, I know, it's still better than keeping every receipt.
But
Talk to me.
there's a loan, is that in the actual or is that a
Well,
separate?
okay.
Loan is excluded, right?
Yeah, okay, when you borrow to get your car. So again, we're gonna take standard mileage or actual, okay?
Mhm.
Again, I recommend standard mileage because it's the easiest. Loan, when you get a loan, it is not income, and when you repay a loan, it's not a deduction. So the loan has nothing to do with this. Okay, now, when you buy a car, let's say that you're a PA. You buy a car, and your PA is called Realtor Guru, Inc. And you buy a car, and your name, which is John Brown, or Sally Fields. You can't depreciate a car in your name that's not titled to the corporation. People do that all the time. You can only depreciate on your Inc. what is titled to Inc. That's the agent's favorite thing. I see your depreciation schedule, Dr. So-and-so. Your Porsche's on there. Can you please show me how your Porsche's titled? Oh, it's titled to me. Well, you can't depreciate it on a company. A company
That's
can
the
only
company's, yeah.
depreciate
Gotta go
what
under
it
your
owns.
company's
EIN
file,
number, right?
It has to have title. You pull that title out of your car, it has to be titled to the same name as the business you're taking depreciation.
So what if I sold my car that's currently in my name to my LLC, which is my real estate company?
You don't need to do that with mileage.
No, I'm not talking about,
Okay.
I'm talking about the loan,
The loan is
Is that-
never deductible.
even though it's an expense?
It's not an
It's not an
expense, it's a
expense.
repayment of a principal.
Well, what about the interest?
The interest is on the note, But the thing is on standard deduction, it's such a high deduction, in almost all
Oh.
cases, you're capturing everything.
Oh, yeah.
So, if you do it in the business name, which now we're exposed to liability with car accidents, so that's a whole nother.
Oh.
And do you have insurance, do you have umbrella,
Mm.
do you have workman's comp?
Mm.
Some insurance companies don't wanna cover you if you're hit on 41 doing business and you've exempted yourself from comp.
Oh, right.
So that's
Right.
why the other is usually better.
Okay.
So the message here, standard is better versus actual.
It's just a lot easier, guys.
For people like us.
To keep your business cars in your personal name.
Yeah, I do recommend that, I'll tell you why. You get good insurance, I always get an umbrella, I get the best coverage I can. Because mileage is dealing with, I drove this many miles for this work. It doesn't involve title. And then you've got kids or people, other people driving, you've got, I've seen people put their wife's names in their doctor PA. She's, out driving, texting, and I mean, you're exposing all of that. What ruins your separation of assets? Can you think of what would ruin your protection?
When you commingle.
Right, so you've got an LLC over here, and you are just going at it with everything. You're paying your light bill at home and your gym membership and all that out of that. You've commingled your business with your personal, and you have ruined the separation protection. You're not supposed to mix them.
Well, what if you have your office at home, and so you're paying your FPL bill, your internet at
Okay.
your LLC?
I'll say there's two ways to do that. One is to pay it personally and then keep track so you can add it to your return. One is to pay it out of your business account, which is really not commingling because you're using that for work. And then at the end, you would disallow some of it.
Yeah, they do.
Right.
Okay.
Percentages. We'll talk about home office in
Yeah.
percentages.
Yeah.
But I want to go back to the auto real quick. Break it down, 58 cents a mile. What does it really cost you to drive a mile? Think of all the other
Right.
inclusive things in there. Yeah.
Even
Gas wise,
Even if you count in the loan, because I've done the
Yeah.
calculation, even if you count in the loan, it'll look likely to be under 40 cents a
Right.
mile.
right.
So
This is a
58
good
cents
deal,
is so
man.
much
It's
better.
very good.
Yeah.
I loved working for a company that paid me my mileage,
Yeah.
58 cents a mile. That was sweet. I'd go everywhere, just for fun.
It's like, when you can't sell, drive like hell.
I have a appointment that I had scheduled before. Can I slip in a question about cell phones?
Okay,
Is this a good time?
sure.
Can you deduct?
You wanna call me on my cell?
Can you deduct a cell phone bill?
Yes, and really, the
All
same
of
thing
it?
there. Okay. They expect you, if you're doing your return, to say, look, my cell bill is $200 a month.
Mhm.
I use it 80% for work. But again, a lot of people deduct the whole thing, but when you have 5 people on your plan,
Yeah.
that's where it's a problem. Most agents kind of go, or you're getting audited and it's $2,400. The agent may say, I'll disallow 600. But where it really becomes a problem is when you've got all your kids and you've got, internet on the phone and they've got games and.
Yeah.
And once, see, it's kind of like give and take. Once you irritate the agent like that, then on your next item, they're probably gonna be less likely to give you anything. And you do that in 3 or 4 categories, and you're probably gonna have your doorbell ring another year.
So if it's reasonable, if you're coming up with a reasonable percentage.
Yeah, and of course, what this was saying with what's ordinary and necessary is, they're looking at your gross and net, saying, is that reasonable? You made $100,000 and you're reporting 2,000 as profit. Is that really realistic? The government has IRS has another rule, just so you know, because we always get people with airplanes and balloons and horses and all that. If you have a Schedule C or LLC and it loses money every year, what do they call that?
Hobby.
A hobby. And they're gonna say, and you applied 30,000 of a horse loss against your Schedule C, because that all flows through, and they're gonna disallow all that. Trade or business means you're in that trade to make a profit. So if you own a restaurant and every year you report a loss, guess what's gonna happen? What, are you giving the food away?
Yeah.
Is there cash involved?
How many years, they used to recommend like, you can lose for 5 years or 7 years?
I think it's 3 out of 5. Yeah. So-
I've had years like that. Anybody else in real estate?
Yeah.
Been doing it a long time.
And that does happen. You guys have those wonderful ebb and flows. Okay. So retirement plans in the LLC and S Corp, they're really the same. You can't exclude employees. You can't say, I have an LLC for my real estate and an LLC for my dog sitting and 3 employees here and 3 there. I'm just gonna do the pension in here. Why? So the government says, if you have more than one company, you can't exclude the employees of the other. Otherwise, the doctor or the lawyer just sets up a company for his billings, maxes the pension plan, puts all of the staff under the other company, nobody gets in the pension. That happens in real estate offices.
Yeah.
Because the broker typically also has his or her own Schedule C, or LLC or PA, right? And they'll use that to compute their pension. The government says, wait a minute. As the broker, as an owner, you have payroll for those people up front. You cannot exclude them from your pension.
Hey, Laura.
Lorelei, did you hear that?
Where's
Yeah,
Kelly?
is an LLC required to offer a pension?
If you have one for you, you must offer it to your employees.
Right, but if it doesn't exist, you're not required to
You're not
have
required,
one.
no.
You just, it just needs to be all inclusive of everybody.
Yep, you can't
So
exclude
in other words,
them.
if Jim called his brokerage an LLC, he would have to pay his staff. They can't be excluded from.
Right, so if in his LLC for his part of his earnings,
Yeah.
he did a profit sharing plan.
Yeah.
The level he does for himself, he has to offer to everyone on W-2.
Oh,
But if
okay.
he doesn't have profit sharing, then he doesn't have to offer it.
Correct.
Okay.
Correct. Okay, so you know how important it is to pay your estimated tax?
Let's talk about that.
Yeah.
Taxes. Got estimated tax, whether you're a sole proprietor or an LLC, you have to do estimated taxes.
So sole proprietors and LLCs pay their taxes quarterly on Form 1040 ES. Estimated.
Give us a
tax.
formula.
Okay, here's a good formula. Quarterly, take your net income, okay? And you multiply that times 15% for FICA and Medicare, and 10 to 20%, whatever your federal rate is. I usually tell people to put 35% aside.
So it's times 15% for FICA and Medicare.
Yeah, FICA and Medicare,
And-
and then 10 to whatever your regular rate is. So if it's 20%,
Yeah.
your regular income tax rate, you'd be putting aside 35%.
So when you say putting aside, you're actually writing a check at that
Yeah,
point to the
throw it in
IRS?
your savings, and then each quarter, you'd remit that to Uncle Sam.
Net quarterly.
Right, and of course, those aren't real quarters, but you know what I mean.
Yeah.
April,
So
June,
what was this one that you
September.
reported on again?
1040 ES. Now, why do you want to do that? Do you think the government would charge you if you don't pay enough in? Of course. They charge you if you, in 2017, you owe 10 grand on the return. 2018, you paid no quarterlies. 2018, you owe again. They charge you interest for that and penalties. So over the course of 10 years, why would you want to give them extra money? And those penalties aren't deductible.
So if I pay quarterly taxes on our personal return, that's separate from this?
If you are an LLC or a Schedule C,
Yeah.
it's in your personal return.
Right.
So everything you pay quarterly goes toward that bottom number.
But do I have to do 2 quarterly payments, one for my LLC and one for my personal?
No, it's all on that 1040 ES personal voucher.
Okay.
They're the same thing with exception of protection. The LLC and the sole proprietor, right?
Yes.
They're the same thing.
Single member
tax
LLC,
purposes.
yes.
Single member LLC, just one that offers a little bit more protection. You're not dividing stuff.
Just separates you from all the crazy people in the world, because there really are. I mean, people, you know, and even if they don't win, why would you want to tie up all your assets?
Yeah.
You know, one of those guys on TV comes out and he says, you know, your real estate company's in your name. So is your lot, your savings account, everything else. So why go through that if you don't have to? Okay. Any questions before we move forward? We've got 2 hours left.
We did. What?
This is the greatest stuff on.
Who scheduled this class?
I just finished like 96 hours of continuing ed, so
Oh,
I'm
you
really.
must be thrilled.
I'm
You have
very-
lots to share, huh?
It's like an audit.
Yeah, so, okay, let me talk about another point that a lot of people get screwed up on. Anytime you have a partnership, an LLC or an S corp, you should have written agreements. Okay? You should have in writing what your operating agreement is for that person, an employment agreement, What it would be for someone to buy in, it's much easier. Here is our buy-in agreement. Because it's like divorce, it causes wars. Someone says, I don't like you, I want to get out. Fine, here's our buyout formula. Here's what we agreed to. Versus doing it in litigation or arguing or fighting. So in any business, all of that type of stuff should be in writing. Just like, with the operating agreement here with the owners, they have an agreement. This is what we do, this is what happens if we have a problem, this is how we settle this. It's not just left up in the thin air. That's where people have terrible problems. In a business where it's 50-50, guess what happens? You don't agree, nobody wins. So in a lot of those agreements, when it's 50-50, there's a tiebreaker clause that says, hey, look, if we don't agree, here's how we settle it. Otherwise, you can be at a standstill. Now, beyond that, what about internal control? Would you just trust anybody to have access to your checks, your bank account? Do you use passwords? Do you leave signed checks in the drawer? What type of controls do you have over your company? You would be surprised how much fraud and embezzlement, one of my licenses deals with that, how much fraud and embezzlement that goes on in the world. We get all those good juicy forensics going. And the more organized you are, the more controls you have and the structure, the better. A lot of people just don't even know what's going on. I mean, they come in and have no idea.
Oh, good, so there's other people like that.
No, and just, and you don't have to be overly anal about it, but the more that you can, the larger you get and the larger your teams or groups get, it's better to have things in writing.
All right, Maggie, you're getting ready to leave, I can tell.
Okay.
Can we circle back to home office? Because I know
Sure.
that's a point of
Oh, I
contention
know,
for
I know,
people.
you just,
Yes.
it's a percentage of your home, and it's your expense.
Yeah, so the
Percentage
By
of what?
square footage.
By
Square footage.
By what do you call it in
Yeah.
Florida?
What?
The square footage?
Square footage.
No. It doesn't,
Under air?
it's gonna have.
They call it the same in
Under air.
Massachusetts.
Under air. Well, in Massachusetts,
Oh, under air, yeah.
a frickin' breezeway is
They don't have air.
square footage. Okay? So in
I thought it
Florida,
was
you
done by
understand it's under.
cubics here.
Thanks a lot, I appreciate it.
Home office, let me say this real quick. So the rule is a little bit strict, it's a hot topic because, it went to Supreme Court and all that, and the IRS gets all rough. But it has to be your room that you use for nothing else. Now, how often does that happen?
There's like a certain percentage in the.
You go to someone's house and they've got a
Right.
55-inch screen TV in there and a bar.
Yeah.
And their real estate papers are all over the coffee table, and that's their home office. Technically, that's not allowed, even though they may never come out.
Yeah.
So, and then it is the square footage of that room to square footage of the house, times your, FPL, etc. You're not supposed to throw in your weed-eating guy and your pool chemicals and, it should be direct things. And then there's a form you fill out, and it limits that based on your return.
That's probably, correct me if I'm wrong, the home office thing is one of the first things the computer algorithms look for when they want to flag somebody.
Well, if it gets kooky,
Yeah.
I've seen people come in, their home office expense was 18 grand.
Yeah.
And their income's 50, and the IRS goes,
Scott, if you got audited, would they actually do a site visit?
Well, what they would do is this, they would throw it out and say, please show me where you got your number.
That's when you take your 24 by 24 living room and turn it, put one desk in the middle of it, nothing else.
I don't let my clients talk to the IRS because they screw it up.
15,000 for bourbon?
They get in there and just start, they get nervous and they start talking about it. Oh my God, yeah, there's money in the mattress.
That's what they're hoping for.
Realize the beating of his
Or do you
heels.
have, I know it was kind of LLC versus S, I was trying to throw a few more things at you. Is that clear? What entity is best for you guys?
Yeah,
I'm getting
it tells me I need to set an appointment with you.
Yeah.
Because I'm a partnership LLC with my wife.
I have
Yeah.
a PLLC that I
Mhm.
set up, but then I asked them, then I filed with the IRS to be recognized as an S corp.
Yeah, there's all these type of check the box rules, but do you have any partners?
I do not.
Okay, so you're really you, that's okay.
Yeah.
And yours is not as crazy because you're dealing with a family member, but you're
That's-
still in the world of paying everything on everything you make.
Okay.
and that you don't wanna do.
I'm serious though, my CPA just screwed up badly, so I'm coming to talk to you.
Let
What
me
are
make
your
one more.
fees? Your fees, what are your fees?
It varies. I'm not saying that to be vague. I'm very
No, I
fair,
understand.
but it just varies. So like a standard 1040, and you know H&R's gotten, so like a normal 1040, if they're organized, it's 450. If you bring in a box, obviously
Then you
it goes
gotta
up,
weed
because
all
one of
that.
my,
Yeah, I
one of my bookkeepers has to go through your box,
Yeah.
and that's their
No, I
time.
understand.
That's the same, by the way, as realtors, that's the same answer you give people. What are your fees? It varies.
Yeah.
And I tell, when people come in, I will tell you, but I have to see something. I can't quote, just on.
Yeah.
And then, just to throw this out there, because a lot of people like to do their own entity setups, S corporations have rules on who can be owners. It basically boils down to individuals. So you can't do like a trust, it can't be like a partner, you want your partnership to be in the S corp owner, it's really individuals, okay?
So if I wanted to do an LLC in my name and open up a checking account and all of my checks go there and then I pay myself out of that,
Right.
but you don't suggest getting like a loan for not the loan itself, but a car, buying a car, you don't suggest putting it under that,
No, I put it under your name only.
under my name
Because
alone.
we're probably looking at standard mileage. And if you drive your car titled to your LLC and you have an accident or something,
Okay.
Now, can I ask a question about LLC? There was a time, or is it S corp? Besides the protection of an LLC, don't you pay, and this might be a Massachusetts thing, don't you pay more self-employment tax as
Yeah.
an LLC?
LLCs, earnings out of LLCs and partnerships never cap on the Medicare rate.
Okay, Medicare rate.
So you pay an extra 3% that you wouldn't pay on that dividend distribution in the S corp.
Okay, or as a sole proprietor,
The
right?
sole proprietors have no cap either.
Oh, okay, so there's no difference.
So only the S corp has that cap.
Right, and that's why so many people have them.
Think about that, let's do some math. If you,
Oh,
You have to make a lot more money though to do it.
above 75 is where I believe it makes
net,
sense.
net.
So I'll tell you a quick story. I had a very large physician group, and it's not here, it's somewhere else. And there were millions of dollars that could have been distributions, and the previous accountant never said a word. And we're talking 800,000, 900,000 of overpaid tax. It's just planning, sometimes paying the lawyer or the CPA to get it set up right is very important, because we don't realize what we don't know. 90% of the people that come in have screwed up their return against themselves.
You mean because they went to sunbiz.org and signed?
No, I'm saying they did their own turbo or
Oh,
something,
I see.
and they didn't know.
Yeah.
And you just don't know, you think, geez, I saved on my accounting fee.
Well,
There goes 800 grand in taxes.
In this business specifically, and in this company specifically, we're taught to be entrepreneurs and independent business owners,
Yep.
and none of us set ourselves up that way. I mean, like, I have tried, I actually had 2 LLCs to funnel my money, which I'll show you when we meet. And I'm finding out today that it's probably not
Yeah,
the
but
right
I
way to
believe
do
your
it.
dad was an S.
Huh?
I think your dad was an S.
Yeah, well, I know he's got a lot of LLCs, but then maybe they were S's at the Fed level, right?
The real estate,
Yeah.
You gotta remember too, that the thing that gets confusing about the C and S and LLC and everything is, the LLC, if I'm understanding correctly, is a designation, like you say, really specifically to limit your liability. It isn't a tax code
Right.
thing. The being an individual, partnership, or corporation, that's where you get your different tax.
But don't be a realtor as a sole proprietor, please.
Right.
Be a realtor as an LLC, and you're the owner. It's treated just like a sole proprietor. No additional paperwork, no additional taxes, and you have the protection.
What did it cost? $200 to form an LLC through an
$50.
agent?
Yeah, well,
How much?
but see, here's the
$50
problem,
is
like,
something.
I've got 4 LLCs that I own, 2 of them with my wife that are specifically related to our business. But the problem is, I've never been to an attorney to have the articles of organization drawn up, I've never done any of that stuff, because you can go to Sunbiz and buy an LLC for $150. but it's not set up,
And in
right?
some cases, that's okay, but let's just say you get into other hot water, if you don't have your, it's a lot of garbage, I know it sounds like, you don't have your minutes, you don't have your stock book. So, in a lot of cases, you don't need that, but you do need your setup and your tax entity correct.
And I'm not an attorney, just like you gotta say it all the time. But, like you're doing business as an LLC, but you've got just Brett Bishop all over everything, and you have it on your advertising, and somebody does business with you based on your advertising, and you haven't told them it's an LLC, you may still be personally liable.
Yeah, all your checks,
So-
everything should match your
Everything has got to
company
be
name.
like.
That's a good
that
point,
LLC
thank you for repeating,
on.
can you confirm that?
Yeah, so your letterhead, your checks, everything should match, yeah, just like mine says,
Yeah, which,
If you're an
so,
LLC,
the LLC.
so because of the real estate advertising rules that we had, all of our signs did say Bishop Realty Group LLC. I had to take that all away, and then I did Bishop Realty Group LLC, DBA, the Bishop Group, and now I'm advertising the Bishop Group.
now, I don't know legally what the sign rule is, but
Who the hell are you?
You just-
I know.
What are you?
just don't want
Bishop
you-
Realty Group? What
You
is
just don't want people
He's
thinking
so
that
far
you're doing-
from
you're
being
doing
who
it.
he is.
I hope I didn't confuse you, but it is confusing.
It is.
Yes.
Yeah.
Do you have attorneys that you work with that you recommend to set
Sure.
these things up? Okay.
Sure, we like to normally say, who do you normally use? And then we have people that we would recommend, because there's a lot of good business attorneys. And then down the road, you start talking about things like your retirement plan. What about your estate plan? People pass away or get, ill without anything with that in writing, and that's a nightmare.
Can I ask a question? What's the maximum amount somebody can contribute to an IRA if they're a sole proprietor or an LLC?
Okay, so depending on what type of plan you have, it varies.
Okay.
So if you do IRA, it's the most limited. If you do simple IRA, it's a little more, which is the payroll deduct. If you do 401k, which is the best thing to do, because even as a single member LLC or a sole proprietor, you can do what's called a solo 401k. And I think that's 25,000 this year. So you're gonna put 5,500 in an IRA, and that's the limit, where you could do up to 25,000 in a 401k.
25,000?
Right. And it's not required. Now, on top of your 401k, you can add the feature called profit sharing. Profit sharing would let you get up to a total of over 50,000. So let's say that you sell the Sunseeker Resort and you have a huge commission. In a year like that, even though this is not mandatory, you would have the option of deducting some money you're putting into your own retirement. Makes sense, right?
Sweet, yeah.
And is Social Security gonna be there? Well, why not have a few more options? Fund something for retirement.
Excellent.
Roth
Thank
or,
you.
Roth or non?
I'm not a Roth guy.
You're not a Roth guy?
I'll tell you why. And it can, nowadays, they let you split it. So a lot of times when you have a pension plan at work, they'll let you split your deferral, which is that piece, into Roth, which means you're not deducting it now, all right? So that when you take that out, you're not paying tax on it, okay? But in your years of working, typically your tax rate's higher. I like to see that deduction.
Gotcha.
So, and the other thing that I don't trust is that when they say they're never gonna tax a Roth. Well, they were never gonna tax Social Security either.
Yeah.
And in 1993, that hammer fell. So I like to see the deduction.
Just pay it now.
I mean, like you see, you take the deduction.
Yes.
So when you fund a regular 401 or a regular IRA, we're deducting it from your income.
Yeah.
So if you put 20 grand in your 401k and your tax rate is 30%, we save 6 grand.
Yeah.
Pretty nice, right?
Yeah.
Mhm.
But you pay it later.
Yeah, you
But
take it later as you take it
You
out.
pay it when you're in the 10% bracket.
Yeah, normally in retirement, you're going to be, most people are gonna be earning less.
Who's got a burning question?
I'm so confused right
Who's confused?
No, I mean, you did a great job explaining it. It's just overwhelming until
It is
until you get to meet one-on-one with you and talk
Yeah.
details.
Here's the goal of this, right? If you're considering, right now, most of you are sitting there right now, I gotta be at least an LLC just for the protection.
Right.
Okay? this is where you make the connection with somebody like Steve, talk to an attorney, get the LLC set up properly.
Or Scott.
Or Scott would be good.
Did I say Steve?
Yeah.
What?
Because I just got over a cold and I'm sweating.
Scott. So, and become who you're supposed to be and start funding that. And I think the most important part is paying your quarterly taxes.
Oh my gosh.
I can introduce you to somebody that never did it.
I can introduce you to somebody else.
I literally.
Well, you guys are in what I call a danger zone because
Yes.
you have these highs and lows.
Yeah.
So you get a high, you don't pay, and then you get here and you need the money to live on, and you get behind, and all of a sudden, oh my gosh, and then the penalties really add up.
Yeah.
And remember, for installments, which they'll let you do, you cannot owe more than 50. So you can do an installment agreement, usually over 24 months, but if you miss a few years, they're going to come after assets.
I had a very close relationship with my IRS agent.
Yeah, I've been on an installment plan for 4 years.
First name basis. True story, quick one. I had a very close relationship with my IRS agent for a couple of years, and then about 3 years later, I call on a listing because I'm in production at the time, and it's her. She left the IRS and went into real estate.
Wow.
That's funny.
Maybe she's
She saw how
undercover.
big you were doing.
I said, "Is this Paula? Paula, the IRS agent?" She goes, "Is this David?" I go, "Yeah. Can we be friends now?"
She was
She
lying.
audited you so much, she saw how well you were doing, she made a career change.
She was lying. She was just trying to undercover a restaurant.
Yeah.
Okay, yeah, I'm sorry if I confused you, but it is really confusing. Now remember, I'll say one other thing to make you go, wow. So for us, we have the tax rolls. Then when we do, because we do audits, not IRS audits, but financial audits, they have a whole another set of rules, audited financials. And then we have all these foreign rules. And then I do forensics, we have all these forensic laws. And then I do valuation. The government tells me to value your business, or you're getting divorced and your wife says you're worth 10 billion, you said I'm worth 500. And then they have all these rules on how you have to value. And it really is, it's like your industry. Everything's gotten very tedious, and you've really got to stay on top of the ball, no matter what your game is.
Well, you have to stay on top of your game, because isn't the IRS changes a book about this thick every year?
Oh, it's, yeah, every
Might even be thicker than that.
Yeah.
You
can't rely on
One other
software.
question that might be helpful for everybody here too is that, can we come and talk to you when we have a foreign seller and we're worried about FICA rules?
Okay, do you have a second to explain that?
Please do.
Okay. FIRPTA is a dirty word.
Yeah, FIRPTA.
FIRPTA.
So, 1986, FIRPTA came into play, the Foreign Income Real Property Tax Act. And that was because foreigners were buying and selling and leaving, and nobody was paying the tax on the gain. So the government said, look, years ago, we're going to take 10% of the gross sales price, Mr. Canada. That way we will intrigue you to come back and file your return to get your 10% back. Well, now it's gone to 15%, right? So yes, we do. The problem with FIRPTA is to do the transaction, the individual has to get a tax number. After 9/11, the government said, we're not just giving you a tax number anymore. You've got to prove you need it. So that process, but long story short, yes, we do the FIRPTA. And it is a cuss word.
Yeah.
And
Hey, you do the FIRPTA? I do the FIRPTA.
Yeah. Who's going to be calling Scott?
Well, yeah, if I can help you, call. I try to help whoever I can. And
You're not like a doctor not taking new patients, are you?
no. And we take whoever, really.
Okay.
You don't have to be big.
Wait, you haven't heard my story
No,
yet.
well, really, there are some.
You're not the standard 450.
We're out there.
You're gonna be way up there.
Oh
Better
my
save up
gosh.
to see.
yeah, I think
to see
David
it.
is David is the new orange.
Yeah.
He's gonna come in a jumpsuit. Can you help me?
Yeah, we've got a room that's kind of padded. Anything else I can help you guys with? Sorry I'm sweating so much. I really didn't feel good last
No,
week.
It's all right. Hey, before you guys all run away, let's give Scott a round of applause. And before you run away, just know that, I don't know if you're staying here, but there's about to be a live stream out of Austin, Texas, on command, how to get paid, okay? And that's through the Opportunities Pipeline, okay? You need to know this stuff, okay? So you might want to live stream it.
And there's a hurricane party.
It will be here.
Yeah.